A few months ago, it was CLSA that put out a whole list of stocks calling them Modi stocks. There were a bunch of them, and most of these stocks haven't moved very much since the election verdict on the 4th of June. As we go into the budget this time, the bullish sentiment index indicates 92% the people are optimistic in that sense about the budget, which makes me believe that with very stretched valuations, extreme optimism around the markets, we may be looking a lot more vulnerable now than we ever have. Would you agree?
So I think, Samina, the one thing that the sell side has got perpetually wrong for the last 10, 12 years that we have seen, and I think everyone collectively needs to take responsibility for it, ourselves and our brokerage included, is we overestimate earnings at the start of every year, and we have to, at the end of the year, downgrade those earnings. And I think this has been a consistent phenomena for years, and if you look at the Bloomberg estimates, they will be no different. You were talking about valuations. I think they have been, when you look at the mid and small caps, they have gone beyond reasonable expectations. I don't even think there is a conversation to be had about whether they're reasonable anymore. When we talk to institutional investors and some of the larger ones, we're actually discussing sell ideas, believe it or not. They actually want to know what to exit rather than what to buy. And I think, I was just looking at, we research about 180, 190 odd stocks, and I was looking at the last 4 quarters data. On average, we have downgraded about 60, 65% every, on a trailing basis every quarter. So you're not in an earnings upgrade cycle by any stretch on an aggregate basis. Will stocks be cheap? Of course, there will be stocks that are cheap at a 24,000 Nifty. There will be stocks that are expensive at an 8,000 Nifty. But I think at an aggregate level, there is just way too much. I think it's beyond price to perfection. Just take a look at what's happening with Wipro today. There is no room for error. If you slip slightly, the market's going to punish you. There seemed to be a semblance of that happening with defense stocks last week. I think we're probably one of the first brokers on the street to actually downgrade the entire sector to a sell because, it had reached levels that we, did not understand. And we were happy to put that. But I think the way the market is behaving, and this has nothing to do with the budget. And I think, the point has been made consistently, Samina, and you probably, running your shows have got bored of hearing of this, is that it is a liquidity-driven rally. I mean, it is way ahead of fundamentals. Any fund manager, that you speak to will tell you that, for companies that are 20-25% return on equity or capital employed, stocks are trading at 55, 60 Ps. That kind of makes no sense. So I would personally love it if you had a 15-20% correction in the market. I think it would restore some sanity. But I think the probability of that, Samina, I've pretty much thrown in the towel. I've got my call on the market consistently wrong. We're up 18% from the 4th of June lows and nothing has changed in India barring flows. So, if the flows sustain, then, who's to say where we go? But, given where the overall fundamentals are, especially with respect to earnings, I think we're way, way ahead of where we should be.